Good afternoon, everyone. Today is Wednesday, the 29th of February, 2012, last day of the month here, obviously. The market closed down a little bit today, and this is being brought to you by Realtik today. Realtik is the maker of the software that I use for trading and the charts that you see here, so take a look at realtik.com. But let's take a look at these markets. We had the S&P 500 down 0.39% today. A lot of people seem like they're getting a little bit panicky about this market, but if you look at it in context of the uptrend, we're still clearly above that rising trend line. Now, we've been talking about the extended nature of this market and how it's innocent till proven guilty, and I think that's still the case, but we have to be aware when the market does get a little bit more volatile. And as we saw with gold today, trends don't last forever. Here, gold had been rebuilding its bullishness here. Didn't get quite up to this prior fourth quarter peak in here on gold. Let's take a look at it, back it up a little bit. But it came off real hard today, and that just shows that we always have to keep a very strong defense, because as much as they look bullish one day, what stops are for, and why we use the definition of trend of higher highs and higher lows, is that when they break, they can break real hard. Now, some people were getting a little panicky about Apple as well, because I guess some analysts came in and downgraded them late in the day, but the stock closed right around that volume weighted average price again, and it after gapping higher. Now, Apple is definitely extended if you look at it on pretty much any time frame. We've just had a run of 50 points, or a little bit more than 10% over the last 2 weeks, and that's since the last time people were calling a top here just 2 weeks ago, and really after that day it didn't close lower than that close. Again, so we've had a lot of up days here. It's up 10% since people were saying that's the blow off top, that's the big volume, that's the top. You look at a monthly chart, I mean, it's getting a little bit silly maybe for Apple, but the trend remains higher. We're above key moving averages. We're still closing above a rising 10-day moving average, so 10, 20, 50, etc. That these trends are still intact, and they can come off quickly though, and that's the lesson I think that gold should teach you today. And I think though that you're better off if you look at this and say, oh wow, that would have been a great short in gold. I think that a lot of people are looking for that big dump in Apple to be short, whereas the easier money has been made obviously on the long side. Now, it doesn't mean it will be forever, but I think that people who are trying to pick the top in Apple over and over again, they're getting it wrong, just like the people who are over and over again getting the bottom wrong in natural gas. This is natural gas here, and the best case you could say for natural gas is that it's neutralizing. It's in this range, and maybe it's in a stage 1 accumulation, but we've still got a declining 50-day moving average. We've still got declining 20-day moving average. So the key is just to focus on these trends and not get panicked about a little bit of selling, because that's all we saw today was a little bit of selling here. The key level really for this market in the intermediate term trend, I think, is probably still down near about that 135.80 to 136 level. If we get a break of the trend line, I don't think it's a big deal, as we've been observing with the Russell 2000. We broke this trend line several weeks ago in here, and let me just back that up a little bit so we can draw that trend line in off those lows. We broke this trend line several weeks ago, but the Russell 2000 continues to consolidate in a sideways range. Now, we are down at the bottom end of that range in the Russell 2000, and that gives us a little bit of reason to think that we have to be cautious here. We closed below that 20-day moving average. We haven't done that yet, and if this Russell 2000 breaks down and holds below that 81 level for more than really a half hour or so, then I think you have to look at this market and say perhaps the Russell is the first to break, and that the other markets are going to follow. So back to the S&P 500, be aware of obviously the lows that we've seen this week. Today is Wednesday, so we've had 3 days of trading. We had a little bit of support here, 136.70. Let's watch that tomorrow. But The lows for the week really down near that 136 level. So I still think that is the key area, 135.80 to 136. A little pullback to that point. I think we still haven't seen a 1% pullback this year in the S&P 500. The Nasdaq was down a little less than a half a percent today, and this market remains in a solid uptrend. It is extended, and people have been calling it extended all the way back in here looking for the top. We are maybe going to test this trend line again tomorrow. If we break that trend line, perhaps we drop down a little bit down towards the 64 level. That is where we should encounter some support. That's where the prior resistance was found. Below that, then I think you look at about $63.10 and then at about $62.80. But the market shouldn't fall apart all at once. Instead of looking for shorts, what the when we're in a bull market, instead of looking for shorts, what you want to do is look to protect your long side profits and move to the sidelines when the market tells you to move to the sidelines. Now, short term traders who are trading off a 1 minute chart and that sort of thing, that's a whole different story. That's what scalping's all about. But I don't think it makes sense to have large short exposure overnight. Now, right now you can see, looking at the after hours, the SPY is down a little bit here from the close. We close at 137.02 in the cash market. We're at 136.74. So, tomorrow morning, is that where we're going to be? Who knows? Just focus on the key levels. Don't get too panicky based on the reaction to a headline. But that Russell, keep an eye on the Russell tomorrow. The semiconductors. Here's another example of a market that broke its uptrend line. I didn't even draw that correctly. This is the correct trend line. That's what really was the essence of trend. We broke that a week and a half, 2 weeks ago, and we continue to hold the key level, and we tested it, in fact, on Tuesday, which is $34 a share. We've also been bouncing around this 34.5 level, but basically it's neutral. We're not doing much in here. If we break below and hold below $34 a share for more than a half hour or so, then I think you want to look at it and say, now we need to get a little bit more defensive. As I said in a tweet this morning, I think that this market is just going to be generally less forgiving, and people who are anticipating breakouts are going to find that a lot of those breakouts aren't coming to fruition, and they're not going to be rewarded for being early. So wait for confirmation from price action. We've had a hell of a rally in all of these markets. The financials, broke out to a new high today. They broke that range that they've been in, and this is the range. This is the key level we've been focused on, which is 1440. We did get back up above that 1485, 1490 level, but didn't hold up there. So, can you call this bearish? I don't think it looks bearish to me. We had the possibility that from this failed breakout will come a fast move lower, but we're going to have to break a lot of key levels first. So 1470 looks important for the near term. If we break that, then it's looking like we could get down towards the 1440 level. And if we break below 1440, perhaps we'll see our first test of the 50-day moving averages this year in all these markets. But don't panic because of headlines or just because we have a little bit of selling one day. We remain in an uptrend in all these markets, and as I've been saying in the Russell 2000, these consolidations are generally resolved in the direction of the primary trend. The primary trend is higher. It doesn't mean they will always do that, but let's see if this market can hold some support in this area. Otherwise, the market's telling us we're in a more neutral environment. You shouldn't be pressing to the long side until we get confirmation from the market itself. And as far as the short side opportunities go, I still think they're best suited for day trades only.